Yeah, awesome to have so many people jumping onto this call. Welcome to today's 3-hour blockchain workshop. I'm going to be the host and main trainer for today. You're going to hear some other voices as well. But we just want to give it one more minute for a couple people to jump on. Obviously, when we've set up a Zoom like this, where you have to register with your name, with your email, some people forget to go back to the email to find the link. So we want to give it one more minute for a couple more people to jump up. It's awesome to see so many different people on this call. I can see Angela Graves. I can see Gary Kramer all the way from Florida. I've seen Netherlands on here, Harry Nicolette. I've seen Stu Hall from England, Pascal from Belgium, Monica all the way from the UK. I've seen Brent from Australia. I've seen someone from India as well. I saw a name shoot across a moment ago, London, UK. So it's fantastic to see so many people from all over the world, from so many different timelines and territories jumping together, knitting together, and going on a journey together. And today is going to be a journey. It's going to be a learning journey. And if you've never been in cryptocurrencies, if you've never been in blockchain as a technology, then today is a great starting point. But even those of you who've maybe walked a journey with cryptocurrencies, or maybe you've already started exploring blockchain, I'm hoping to drop some nuggets today that maybe tweak or change how you approach the markets, how you approach the technology. So I'm really trusting that everybody on this call gets value. It is being recorded. That doesn't mean we're going to put it out in the public domain. We're going to check the quality. We're going to make sure that everything shared is responsible. And if we feel that it will serve the public domain, then we'll put it out into YouTube, onto social media for others to access. But we're just about ready to get started. It's going to be a really full morning. And so maybe just to set the scene and set the tone, I want to put some helpful house rules in place. Firstly, I am a big fan of note taking. So I want to encourage you to get pens, get notebooks, and take notes. That way, if a question pops into your head, you can quickly write it down and then get focused again. And then later we can revisit the questions. If you don't write it down, our brains are wired to try and solve the problem. And so the question keeps bouncing around, and we filter the information we're hearing through that question. So take the time to write it down so your brain stops working on it and it can absorb more information. Just type a Q if that makes sense. Q for question. If you've got one, put it down in your notebook so that you can stay up to date and keep focused on today's call. Great, a lot of people are typing Q. That's awesome to see. So I think we're just about ready to get started. I want to dive straight into it. I'm going to be sharing my screen with you, which means my video is probably going to disappear, and that's okay. You're going to hear me clearly, and the images are going to make sense. We're going to do some practical education. We're going to do some practical steps together, and we are going to take breaks. So we're going to do a 10-minute coffee break in a short while, not in a short while, in about 40 to 50 minutes, we'll have a coffee break, a toilet break. Then we'll go into another second session. Then we'll have another coffee or toilet break, and then we'll do a third session together, and that'll take us the full 3 hours. At the end of all 3 sessions, I'm going to be giving away $500 worth of cryptocurrency. So I want to encourage you to stay on the call, because it might just be a small injection into your cryptocurrency portfolio. So type in me if you're excited about maybe being in the running for that $500 worth of cryptocurrencies. Type that in right now. When you type in me, that's a commitment to stay the full 3 hours. Right, that's what that me is. All right, great stuff. We're going to dive into it. I know it's a Saturday. I know it's sacrificed. I didn't get to go watch my sons play rugby this morning because I wanted to be here. I'm asking you to come with an open mind, come ready to learn, and come knowing that it's a sacrifice, that there's certain sacrifices that have high benefits. So let's get into this together. I'm going to share my screen with you. Loving all the me's coming through in the chat function. That's fantastic to see. So let us pull into the PowerPoint here. I'm going to make sure that it's loading okay. Yeah, let's start from beginning. Let's get into it. Welcome. If I haven't yet introduced myself, my apologies. My name is Bruce Hughes. I'm a father of 3 boys, married to Jenna. We spend 8 months of the year in Dubai, and then we spend the other 2, 3, 4 months back home in South Africa and doing a bit of traveling. Before we get into any training, I do want to put a disclaimer out here so that it's super clear on what this course is and what it isn't. And I also want to just maybe share that there is going to be some difficulty levels. So in session 1, the technical difficulty level is going to be sitting at about a 4. Session 2, the technical difficulty level gets into about an 8. And then session 3 gets to a 6. But I promise to hold hands with you, so don't panic about that. Here's the disclaimer. This course is for educational purposes, and every effort has been made to accurately represent the crypto markets and blockchain technologies at this time in history. So the date today is the 19th of February, 2022. If you're watching this and it's the year 2023, the markets may have evolved and moved on. The technology may have evolved and moved on. So please make every effort, if you're plugging into a course, if you're plugging into a workshop, to be aware that the information is relevant at the time it's being shared. The second disclaimer is that I'm not a financial advisor. I don't know your financial situation. I don't know your financial goals. I don't know your debt to credit ratios. I'm not going to give advice on that. We're not looking at financial products or services either. So go and have that appropriate conversation with the appropriate person. The third disclaimer is that I'm not a tax specialist. The tax laws in Dubai are different to the tax laws in South Africa, which are different to the UK, the US, Florida, Australia, Belgium, Netherlands, Malaysia, India. So speak to somebody in your tax territory if there's a tax implication from what you learned today. And then lastly, because blockchain as a technology is only 13 years old, and because cryptocurrencies have only been around for that time, these markets are still young, and therefore they are still considered high risk. So apply common sense on any decisions that you make. Type in 4, the number 4, if you heard those 4 disclaimers very clearly. Current information, not a financial advisor, not tax advice, and high risk, therefore common sense marketplace, please. 4, 4, 4, a lot of people typing 4. Everyone who's taking 4, I'm taking that as consent to move on to today's course. If you haven't typed 4, you haven't given me consent, in which case the responsibility sits with you to leave the course now. because this information is ultimately sitting in your hands and heads and something that you need to choose to take responsibility for. So let's dive into it. What is the big deal with blockchain? Well, let's have a look at blockchain as a technology. I want to start with internet versus blockchain. And I want to use this analogy. The internet is a massive highway, and that highway is constantly exchanging or moving information, emails, images, videos, payments. The internet has allowed us to move large chunks of data to anywhere in the world. The problem with the internet is, like an open road, it has open to access, meaning people can access that data. They can access those moving funds. They can access your social media, your photos, your videos, intellectual property, confidential emails. And we've seen big data breaches happen in the last few years. And so whilst the internet has been hugely powerful, it has also been slightly too irresponsible in its data management. And so it's not a perfect technology. Arriving on the scene is blockchain. And the first thing that blockchain does is it secures the highway for data exchange. It secures the highway for payments. It secures the highway for sharing of intellectual property, confidential emails, images, videos, musical rights, patents. Blockchain is just a more secure mechanism of exchange. That's what the big deal is with blockchain, security. What is the second big deal? Well, we've got to look at the banking environment to understand why blockchain is a big deal. The banking environment is centralized. That means when you and I get our statement, or we make a payment, or we submit documents for loans or capital investments, all that information and payments go into one central resource, a central ledger, a place where that data is housed and is accessed. And whilst that might not sound like a bad thing, if the central house or bank or place that is hosting that data is not responsible, what we end up with is fraud or manipulation or corruption. Because not all of us get to access and see whether that data is correct, whether the numbers are right, whether the information is being held responsibly, whether payments are being made. And so banking as a financial structure has not been very transparent. Blockchain, on the other hand, means you can have a distributed ledger. That means when we're making payments, when funds are being housed securely, when capital loans are being given, every person can see the ledger book. They can see the accounting. And so nobody can come in and manipulate the numbers. This is what's made blockchain so hugely powerful. And that ledger is kept on record forever. And we can all access that ledger. In fact, if you wanted to go and see Bitcoin's history over the last 13 years, so which wallets it's moved to, how big the amounts have been, you can go to a site called blockchain.com. And in what's called an explorer, you can go and explore the entire financial, in inverted commas, ledger. That's what makes blockchain so hugely powerful, the transparency. And then the third power behind blockchain is its application as Web 3.0. You've got to imagine the internet as layers and layers of information. And blockchain is built upon this layered principle. So we see foundational infrastructure being put into blockchain technologies. We're seeing the adding of exchanges and wallets and vaults, which allow us to move cryptocurrencies and move them safely and exchange and trade them. We've seen the adding of the ability for liquidity pools and capital rewards, a little bit similar to how we can earn interest in banks. And then we've seen the advent of gaming and art and trading and communication all being built into blockchain. And so blockchain is highly adaptable. And that's exciting too. So when somebody talks to you about cryptocurrency or blockchain, understand what is driving the adoption and why blockchain is disrupting so many different industries. It's because of security, transparency, and adaptability. That's probably the shortest summary I can give on blockchain. The big question is, what is the difference then between cryptocurrencies and blockchain? You see, if blockchain is the technology, then why are people so excited about cryptocurrencies? Well, let's understand it like this. Each blockchain is a road, and the more traffic or use on the road, the higher the value of that road becomes. Now, in cryptocurrencies, every blockchain has its own cryptocurrency. And the more traffic or use on that road, on that blockchain, the higher the value of that road, therefore the higher the value of the cryptocurrency. If we go look at Bitcoin, its current value is at $40,000 because that road is used a lot, and it's secure, and it's transparent, and it's trusted. And so the coin, the cryptocurrency that represents that road, that blockchain, has grown in value over the last 13 years. Just type the word value if you understand this analogy of blockchain being a road, cryptocurrency representing the value of the road, the use of the road. It's really important that we just land this point, because if blockchain is the transparent, secure, adaptable technology, cryptocurrencies are the tokens, the shares, the stocks that represent that technology. Okay, a lot of people typing value, that's good to see. Now, this concept isn't foreign. In fact, we've seen it play out in other arenas. So let's have a look at other arenas. Let's give some more definitions here. Cryptocurrencies are a tradable digital token. It represents the value of the technology, services, or products that use that token's blockchain. And so the more use and the more users, the more value will flow into that cryptocurrency and blockchain over time. Let's have a look at a similar concept in another more traditional market. Think stocks or shares. A stock or share, it's a tradable share that represents the value of the services, the technologies, or products that are produced by that company. And the more use and the more users of that company's products, the more value flows into those companies' shares. Very similar concept to cryptocurrencies. Let's have a look at another concept that we all are aware of. I want you to think of the fiat currency system. Fiat just means rands, dollars, pounds, euros, ringgits, dirhams. It's the global currencies that we use every day. You see, a fiat currency is a tradable currency that represents the value of the technologies, the services, the products, the health produced by that country. Sorry, not company, by that country. And so the more use, the more users of that country's products, the more value flows into that country's currency. So cryptocurrency as a concept is not foreign. We're seeing it already in our traditional markets. We're seeing it already in our money markets. The difference here is that cryptocurrencies combine the best of stocks and shares as a placeholder representing value of blockchain, but they also represent the best of currencies, and that they're able to interact very easily. They're able to be traded or exchanged or used to buy bread, milk, sugar, medicine, pay for school fees, if you know how to use them. So just out of 10 being, I get it now, 1 being, I have no idea what this guy in the gray shirt just said. And 5 being, okay, I'm starting to understand this. Whereabout are you sitting on your understanding of blockchain as a technology and cryptocurrency as a placeholder for value and a mechanism of exchange or purchase, just like stocks and shares, just like currencies? Okay, we're getting some really high values here. Everything's been higher than a 7 so far, which is great to see. Fantastic, lots of feedback coming through. It's okay if you're 5 or lower. It means that you're in the right place. And hopefully by the end of this 3-hour session, you'll be sitting at closer to a 7, an 8, a 9, etc. So thank you so much to all of those who've given feedback. Awesome, awesome to see. Now, the big question that comes through is, aren't cryptocurrencies very volatile? And we sometimes look at that and we go, that's a scary thing. And the answer is, yes, they are. Cryptocurrencies are volatile. We've seen big, big price climbs. I remember in 2016, when we first started mining cryptocurrencies, the value of Bitcoin at the time was just over $1,000. And then it spiked. I won't forget this. It spiked all the way up to almost $20,000. And then it crashed all the way down to 3.5. Now, anyone who had bought Bitcoin at 1 and had finished at 3.5, they were happy. Anyone who had bought at 20 and suddenly saw the price go down to 3.5, they probably panicked. They were probably in a bit of pain and a bit of fear. We've subsequently seen it go all the way up to 60, and it's now sitting at 40 as well. So the markets are volatile because they're young and they're fairly small, sitting at about $1.5 trillion currently today. That's a small market, easily moved. But what will it be in 2 years' time, in 3 years' time, in 5 years' time? We've got major financial houses like JP Morgan, MicroStrategy, BlackRock, Blackstone, Grayscale, HSBC, all now pulling Bitcoin and cryptocurrencies into their portfolios and offering it to their clients. Quickly in the chat function, do you think that will have a positive effect or a negative effect on the marketplace? Do you think it will add to volatility, or do you think it'll start decreasing volatility over time? In the comment section, I want to see what you think on that. So lots of plus signs, lots of positive. I think probably positive as well. But it's not just the financial houses that are now starting to adopt cryptocurrencies. We saw El Salvador as a government adopt Bitcoin as legal tender last year. We're possibly going to see another 5 countries within the developing nations adopting cryptocurrencies or Bitcoin as legal tender as well. We've just seen California go and jump through a whole lot of hoops because it is set to start adopting Bitcoin as legal tender too. So it's not just financial houses, it's now countries, governments, institutions that are moving away from the traditional mechanisms and are moving towards this new versioning and growing technology. So again, just seeing that, positive effect or negative effect, lowering volatility over time, increasing volatility. Which one do you think it'll be? And what benefit do you possibly have to stand by looking at this marketplace now, moving towards this technology now? Well, you get to possibly see the wealth flow into it and you get to move with that wealth. And that's a hugely exciting prospect. So the question then is, what cryptos are good to start with? What should we all have inside of our portfolio on day 1? Because often when I talk to people, they're excited about a particular coin or a particular project that maybe I've never heard of, or maybe is trending because a Twitter influencer spoke about it, or an Instagrammer shot a video, or a YouTube video was recently made about it. You see, there are 37,000 cryptocurrencies currently in the market, and not all of them will succeed. So how do we give ourselves a solid foundation to build a crypto portfolio from? I want to teach this principle of 4 pillars, creating what we call a principal account, then a performance account, a potential account, and then lastly, I'm a big believer in having a pay card account, so the ability to swipe a card and pay for goods and services using my cryptos. But I want you to maybe on a piece of paper, just draw a diagram with these 4 quadrants in. Because part of creating a crypto or blockchain-based portfolio is putting projects, platforms, cryptos, possibly in the right places. And so let's talk about that. These are the 4 Ps, type 4P. If you are busy quickly writing out principal account, performance, potential, pay card. I believe if you start structuring it in this mechanism, you're probably going to be here in 2 years' time, in 4 years' time, in 10 years' time. Most people don't structure it like this, and then they go and tell their friends that cryptocurrencies are a scam and they lost lots of money. So let's not be that community. Let's make sure that this workshop equips you for both upward markets and downward markets, growth trends and diminishing trends. And by having this mindset or this framework of the 4 Ps, I think it'll start equipping you for being able to approach this market responsibly. So great to see a lot of people are typing 4 Ps, 4 Ps. Okay, that's easy. That's only 2 keys to hit. I'm hoping you're also taking notes as well. So let's have a look. The first place I want to focus on is principal account. What are the absolute bare minimum coins we should probably be starting with? And I believe it's these 4 coins, and I'm going to justify why in a moment. And I believe it's even in these ratios, 40%, 20%, 20%, 20%. These 4 coins are Bitcoin, Binance Coin, Ethereum, and a very stable coin called USD Tether. In other words, a coin whose value stays at $1. The other 3 are volatile. Now, why would I say that your principal account needs to start in these 4? Let's go do some research together. Let's go have a look as to why we should probably be starting with these 4 accounts. I'm going to stop sharing, and I'm going to take us into a website, 2 websites, where you can go do this exercise for yourself. You should never come onto a workshop. You should never sit through a training where you can't go and verify the information for yourself. So let's go and have a look at this together. I'm going to share my screen with you, and I'm going to take us into Google Chrome, and we're going to go spend a little bit of time on 2 websites. One called CoinMarketCap. Way too many C's in that sentence. And I want to spend a little bit of time looking at CoinMarketCap and looking at the top 4 coins. So have a look at the top 4 coins here with me. It's Bitcoin, Ethereum, Tether, and Binance Coin. So why do I believe that we should have those 4 coins as the foundation for our crypto portfolios? Well, let's do some math together. What is the total market cap of cryptocurrencies today? Well, the total market cap today, we look over here, is $1.83 trillion. That's the market cap. That means total value of cryptocurrencies that are listed on the site add up to 1.83 trillion. Now, I'm going to ask you to do some math here. You're going to need your calculator, maybe the calculator on your phone. Let's have a look at the value that these coins represent. So Bitcoin is holding 765 billion worth of market cap. Out of 1.8, it's holding $765 billion. Ethereum is holding 337 billion. So between those 2, that is $1 trillion worth of the 1.8 that we see there. More than half are represented in those. Another 79 billion in Tether, and another 67 billion in Binance Coin. These 4 coins are dominating the market. They're in the top 4 for a reason. And I'm going to show you another indicator at the moment that we need to pay attention to. These 4 coins are the coins that have the highest flow of value moving through them. And so if we're going to move into this market, we should probably be moving with the coins that have already captured largest market share. Now, why have these coins captured largest market share? Well, let's have a look at that together. We need to understand what is called a value flow chain, where value moves in a certain order, and we need to understand why it's moving in that order. So that was coin market cap. You can go and do the very same exercise on another resource called CoinGecko. We call those platform aggregators. They pull information from different exchanges, from different projects, and they put it all in one place. So go have a look at both those aggregators. Go and do the math for yourself. So let's have a look at what is called a value flow to understand why these 4 are the largest and why we should possibly be moving into them as well. First, we need to understand that we're moving from fiat money into crypto money. And the largest movement is firstly into Bitcoin. That receives the largest amount of funding. Financial houses move from dollars into Bitcoin first. El Salvador as a government moves from whatever the El Salvadorian currency is into Bitcoin first. HSBC, JP Morgan, BlackRock, MicroStrategy, Blackstone all move into Bitcoin first. And so the value movement, the value change is always into Bitcoin. From there, the next value exchange is into these 3 coins. Currently in the order that you're seeing, even though Ethereum's holding the largest market cap, Binance Coin recently did higher volumes, although these 2 do change place often. And then from there, we see movements into all the other cryptocurrencies. So where do you want to be positioned in order to capture the highest amount of value in your own portfolio? It'll be in these 4 gatekeepers. This is where the higher value exchange takes place. And so if you have these as the foundation of your portfolio, then you are secure in the knowledge that value will move through them. Now, is that to say that these 4 will always be the 4? No, I think it is worth paying attention to CoinGecko, paying attention to CoinMarketCap, and tracking if other coins are moving in and slowly replacing them. If they're being replaced, it means that houses, investors, users, people like you and I are starting to have more confidence in those other coins. For now, these are the top 4. And so they should form part of our principal account. The next question is, which exchanges are best to use? Because you can't go from rands straight into Bitcoin without going through an exchange. You can't go from dollars into Ethereum without going through an exchange. And so it is worth understanding that there are 2 types of exchanges out there. There's something called a central exchange, what we call a CEX. We pronounce it like that for obvious reasons. And then there's a decentral exchange, a DEX. And each of these have pros and cons. Central exchanges are people powered. We pay to use those services. We might be able to use them for, in inverted commas, free, but ultimately when we're buying and selling using those exchanges, the fees are high, and those fees are going towards their compliance team, the regulation teams, the auditing teams, making sure that there's enough liquidity, because they're people powered, they're staffed, they've got high overheads. Decentral exchanges are contract powered, they're powered by blockchain. And when we go and do exchanges through decentral exchanges, and when we provide liquidity, we actually get paid for that. Now, central exchanges can receive fiat money. And in order to use a central exchange, you're going to have to register with one of their accounts. You're going to have to use an email, set up a password, verify your email, submit proof that you're actually a human and you say who you are. That's called a KYC, and know your client. And generally, your central exchanges can receive either money from your bank card, Visa or MasterCard, or directly from your account through a deposit or wire transfer. These central exchanges can't do that. And so step one in setting up your portfolio is actually to set up a central exchange account first. I love using decentral exchanges, and we're going to talk about that. But step one is I've got to flow money into a central exchange before I can go and take part in other parts of the cryptocurrency market. So let's have a look at some of the central exchanges that exist globally. Maybe in the chat function, if you've heard people talking about central exchanges, or you've got a preferred central exchange, type the one that you've set up an account with. Maybe you've even gone and sent some dollars or pounds to, and you bought your first Bitcoin. Let me know which central exchanges you're using. Nexo is a central exchange. Binance is a central exchange. Luno, Altcoin Trader, Kraken, Crypto.com, Poloniex. Absolutely. These are all different names of different central exchanges. And you know it's a central exchange because you've had to enter your email, you've had to enter your password, you've had to verify your email, you've had to send in documents, either proof of ID or proof of address or proof of passport. And so you're working with a person-powered platform, compliance team, auditing team, legal teams in place. Those are central exchanges, and there's a whole lot coming through the bottom here. Now, for the purposes of this call, I want to talk about one central exchange, and I'm going to talk about Nexo. You might choose a different central exchange, and that's absolutely fine. But for the sake of this call, I'm going to talk about Nexo, and I'm going to talk about why you want to split of 40, 20, 20, 20. In other words, if you were arriving at the exchange with $100, you would put $40 into Bitcoin, 20 into Binance, 20 into Ethereum, 20 into Tether. And maybe that's an exercise that you do every month. Every month you choose $100 and you go and grow your crypto portfolio. Maybe it's $1,000. Maybe it's not every month. Maybe it's every week. Maybe it's every quarter. Everyone has a different strategy. But I want to talk about why I use Nexo, and maybe the central exchange you're using has the same capabilities too. So I currently use Nexo because they're a New York-based platform and company. They are audited and insured. And that's a big deal in the world of cryptocurrencies. Every time you use a central exchange, there is a risk, just like when you bank with your bank, that a hacker can try and access your account. And it's why banks are insured. It's why there are insurance protocols put in place. Nexo is one of the first central exchanges that's insured. So I feel safe using it. It also accepts payments through Visa and MasterCard. It has a simple KYC, and it has something at the bottom which is very interesting. It has a loan capability. That means I can go and borrow against my own cryptocurrencies. If I had $1,000, I could go borrow 100 or 200 or 300, etc. So that loan capability becomes very interesting when you start moving towards the markets and you're trying to reduce risk. Louis Funzel, great question. KYC stands for Know Your Client. It's a legal obligation by central exchanges to make sure that money launderers, criminals are not using their exchange to move money. All central exchanges have KYCs in place. So I like to build a principal account inside of Nexo. And I'm going to briefly show you its functionality. You might choose a different central exchange, and that's absolutely fine. So I'm going to stop sharing over here. And I'm going to briefly show you what a basic registration should look like, whether it's Nexo or Luno or Altcoin Trader, Binance, Kraken, CEX, Poloniex. This is what the basic steps should look like. So I'm going to share my screen with you, and I'm going to head across to Chrome again, and we're going to move on to another tab. This tab in this example is the Nexo tab. And in this particular example, you'll see that there's an option there to create an account. Now, if you were to go to Altcoin Trader, you would see that it's also got email, password, but you can register an account. If you were to go to Binance, this is obviously a login page. but there's also a normal page. I would say register an account. And the process is always the same. When you create an account or you register an account, the process is as simple as, it's going to log in immediately because I've got this account open, but it is going to be an email, password combination, and they're going to ask you to verify your account. Now, the reason why I use Nexo, and I want you to go and look on the central exchange that maybe you're using. The reason why I use Nexo is for these reasons over here. It has a credit line capability. That means I can track the portfolio I have. And again, the portfolio is in Bitcoin, Ethereum, Tether, and Binance Coin. That's the majority of the portfolio. And I can keep topping this portfolio up just by clicking on exchange. I can come across into the buy section. In fact, I can go here, exchange. I can go into buy crypto, and I can choose different ways of buying. I can pay with all of those, and I can also register a Visa and MasterCard on here. The buying process is not what I'm excited about. What I'm excited about is the ability to borrow. If I can borrow against my own cryptocurrencies, then I can take a small portion and I can go and risk it, maybe in that project your friend's talking about, maybe in that project or platform that you've read about. Maybe I can go and risk it in NFTs that are trending. Maybe I can go and risk it in that trading bot someone's talking about. Maybe I can go and risk it on gaming platforms. You see, if I just borrow 10% against my portfolio, not risking my entire portfolio. And the other exciting thing is that this earns interest. So you can see that every day on those small amounts that are in there, there's interest being earned, and there's a little bit of interest being taken off for the loan that's been taken. And the interest of the loan is lower than the interest being earned. So I've essentially borrowed at risk-free. This is why I like Nexo. It's insured, it's regulated, and I can borrow against my own capital. I'm just going to stop sharing over there for a moment. Take us back into presentation. So I'd like to know from you, based on the central exchange that you're using, do you have one, borrow capacity, and two, is it insured? Go and find those out, because if you have to use an exchange, which we all do, make sure it is a safe exchange to use. Now, having said that, not every country will get access to Nexo. You might be in a country that Nexo can't provide for. So ask people in your country, territory, or community, which are the best exchanges in your local territory. In South Africa, if I have a look at it, I enjoy using Altcoin Trader. It's a very good exchange. I know there's a lot of people in the States who use something called Cash App. I know in the UK, Luno is very popular. You might have an exchange that works best in your territory. But the habit of using the exchange and the habit of purchasing cryptocurrencies is really, really important. You want to move towards the market with habits, with strategy, with rhythm. And so it gives me really great pleasure. I'm going to be handing over to Eugene Blichnote, and he's going to talk about this habit of cost average purchasing. Sometimes people want to find the perfect moment to buy Bitcoin, or they want to find the perfect moment to find Ethereum. There are times to do that. But the habit that sets you apart, that helps grow your principal portfolio, is the habit of cost average purchasing. And so for the next 5 to 10 minutes, I'm going to leave you in the capable hands of Eugene as he does a basic market analysis on Bitcoin, Ethereum, and Binance Coin, and shows you the power of purchasing often or regularly, so that over a 6, 12, 24-month period, your portfolio continues to grow. So Eugene, thank you so much, as always, for being part of the team. Love your work when it comes to market analysis and cost average purchasing. Over to you, my friend.
Thanks, Bruce. Yeah, so I think the most important thing when it comes to cryptocurrencies is to understand that cryptocurrencies aren't just there for us to actually go and purchase and try and make some value over a short period of time. Cryptocurrencies is there as an asset class. Yes, it may be a high risk asset class currently, okay? But I think in time, as cryptocurrencies trend longer and more, that high risk will actually start coming down. So the most important thing for me, what I've learned over the last 5 years with cryptocurrencies, is the fact that when you actually purchase cryptocurrencies, you purchase them in increments, okay? A lot of people want to go and buy cryptocurrencies, want to go and trade cryptocurrencies, and then make some profits, okay? We all want to make profits, but what you need to understand is it is a long-term strategy. So for me, when I look at cryptocurrencies, I always have a longer thinking mindset, in the sense of whenever we have cryptocurrencies in our portfolio, the value over time always goes up. So is it important to understand when we need to buy cryptocurrencies, or at what rate we need to buy cryptocurrencies? Yeah, sure, it is a definite thinking platform that we need to go into. However, what I found is irrespective of the price, when we go and purchase cryptocurrencies over time, it doesn't matter what the price is. I think the most important thing for me is about accumulation, okay? If all of us started 5 years ago and started accumulating Bitcoin and Ethereum and BNB, in what position would we sit today? And that is the main change of mindset we all need to take cognizance of. You know, if you go and look at maybe $100 a month and you purchase Bitcoin for $100 every month for the last 5 years, I will almost guarantee you would have been a millionaire to a billionaire in dollar value today, if you look at how cryptocurrencies have grown over time. And then a lot of people go and say, yeah, but Eugene, maybe it's just too late to actually get into cryptocurrencies. I will say this, you know, when myself and Michelle started 5 years ago looking into cryptocurrencies, it's really, really interesting to go and look at back then what the value was with cryptocurrency. So I'll share this with you guys. You know, the first little driplets of Bitcoin that I bought, I actually bought it at $2,000 per Bitcoin. And we all know currently today it's sitting at 40 and it went up to $60,000. Okay, so had I bought one Bitcoin 5 years ago, in what sort of cards would I have given myself to go and play today versus then? Was I scared? You know, it's when you move into cryptocurrencies for the first time, it is really, really a frightening, scary place to go in. But as you go and learn about cryptocurrencies and the technology and what's behind the cryptocurrency coins, the projects, then you start getting a better understanding of how cryptocurrencies work. And then we all understand that in time, it will always go up in value. So that's kind of, you know, the scary thing. You know, I've gone and done this over time, numerous times, again and again and again. And what's so interesting is with not a lot of people have a lot of money to throw at the problem when it comes to cryptocurrencies. However, when you do it over a long-term strategy and you buy little bits and little bits and little bits, you actually start increasing your portfolio holding. And this is what I love what Bruce is sharing with everyone. Yeah, it's about creating that principal account. If you have that principal account set in order, then we all know that over time, you're going to start growing that principal account. And what I want to also go and do is just kind of give everyone a little bit of an idea of what cryptocurrencies do. And I'm going to go and share my screen with you in a second, just to show you guys what I see when we look at cryptocurrencies. Let me just go share. Let me go there. Okay, so this is basically a Bitcoin chart. Okay, and this is set on the daily. So if we even had to change it to a weekly chart, we can see what cryptocurrencies have done over an extended period of time. So when we look at this chart, we can see, you know, in 2017, we suddenly had that big ramp up in cryptocurrencies. You know, that's when I got involved with cryptocurrencies. And then I kind of went, this is massive. And then after this big pump, a lot of this value started going down. Then everyone said, no, but cryptocurrency is a scam. We're not going to put our money in there. This is most probably the worst investment that you can get. And look at what happened over the next 2 to 3 years. Okay, it was a lot of a holding period. Okay, so that's what we call an accumulation period. Once you go and accumulate, so it doesn't matter what the value of cryptocurrencies is. So that's where cost average purchasing comes in. So it doesn't matter what I purchase cryptocurrencies over that period, because we all know that a cycle will always continue. So when the cycle re-enters at this little phase we had in 2017, we've just done this a year ago. So now suddenly the cryptocurrency started spiking. We had huge value going in there. So now can you see that you would have been in a lot of profit had you purchased over time? And the similar is going to happen in the next 2 to 3 years to come. Yes, we may see Bitcoin still go up to maybe 80,000 US dollars before it starts retracing, and maybe it's going to go and sit at $30,000 or $20,000 within that accumulation period, accumulating cryptocurrencies for the next 2 to 3 years. And then we're going to see the cycle continue once again, where we're going to go and see Bitcoin and all the other coins going to go and excel, and they're going to shoot the lights out in the next 3 to 4 years. So that's why I'm such a big believer when it comes to cost average purchasing. Honestly, I don't even look at when is the best time to go and buy cryptocurrencies. I literally go at the end of every month and I go, okay, cool, here's $1,000. I'm going to take $1,000 and I'm going to go and split it into my principal account, which is then set up on my 40, 20, 20%. And I can go and leverage against my cryptocurrencies and use it as collateral to enter into the market into different spaces. So I hope that gives everyone a little bit of a better understanding when we talk about cost average purchasing. So that's kind of my little session for now, and then we'll continue now, and I'm going to hand over back to Bruce. Thanks, Bruce.
Eugene, thanks so much for that. I love the power of cost average purchasing. You know, when you look at that chart of that big sideways period we had for 2.5 years, imagine if everybody on this call had gone and bought just $100 worth every month for that 2.5-year period, and suddenly that price jumped up. You know, it is about accumulation. It is about understanding that there's a long-term plan here, and that principal accounts, not only are you accumulating, but it's also earning you a bit of interest. You're storing it there, and again, you can borrow against it. So I love setting up the structure like that, and I'm a big fan of it, and that's why I teach it. So having said that, we're sitting 50 minutes into our session, and so I want to take a moment to give everybody a stretch break. You're going to hear a little bit of music coming through for the next 10 minutes, but it is a quick toilet break, a coffee break, and then we kick off with session 2, which is going to get a little bit more technical, but gets pretty exciting as well. So thank you for your time. I'll see you in 10 minutes. 1 minute to go, everyone. 1 minute to go. We are back. We are back. I hope you managed to grab yourself a coffee or tea. I think it's 2 or 3 a.m. where Gary Kramer is. So I hope you've got some coffee or tea with you, Gary. But great, we're going to power on. I'd like to know, off that section there, who of you are going to go and start setting up their 4 Ps and starting to focus on the principal account with those 4 coins we spoke about: Bitcoin, Ethereum, Binance Coin, and USDT. Who is going to go and do that off the back of this call? And the other question is, type done if you've already done that. If that is how you've set up your account, if you've already gone and given yourself a foundation to build off of or succeed off of. You're going to see quite a few people are typing done. They've come through some courses. They've been educated. And so they know that that's the starting point before then going into potential accounts, performance accounts. And that's where we're going to go for our next session. So welcome and well done on making it to session 2. We're going to dive straight into it so we stay in check and on time, and let's power on. So sharing screens. There you go. Right. Let's go. Let me get my screen working. Right. So session 1, technical difficulty was a 4. We're about to crank it up. Session 2, technical difficulties an 8. I'm going to ask you to hang in there, because even if you don't go and take these steps, you'll be smarter for knowing that they exist. So we're going to power on into session 2. Technical difficulty sits at about an 8. But before we do, I want to give you a brief history of blockchain so you understand how the technology has been adapting and how more and more players have entered this space. So in the early days, Bitcoin was it, the only cryptocurrency in existence. And the only way for Bitcoin to come into the economy and transact was through something called proof of work mining. That means you had gamers at home running through graphics cards, you had warehouses starting to be set up, and people just starting to put infrastructure, hardware, into the Bitcoin industry. This then brought on some other coins, what we call alternative coins or altcoins. We saw Ethereum arrive at the market, Litecoin, who else arrived? Dash, Monero, sure, there were a whole bunch. But suddenly these other blockchains came about and these new coins entered the market. And because of these coins, and because more people, more gamers, and some more tech enthusiasts were paying attention, we also saw the arrival of peer-to-peer exchanges. That's people like you and I deciding to exchange value. Me saying, I've got some of these things called Bitcoin, I'll sell them to you. And you saying, well, I've got $100, I want 10. And so a peer-to-peer exchange happened. And that was purely built on trust and knowing that the other person wanted what you had. But the industry grew. We saw even more coins and more projects starting to enter into this space. And with it, we saw the arrival of the first central exchanges. These platforms that allowed people to exchange value without knowing each other. So it was no longer peer-to-peer. You now trusted the platform because the platform was vetting the people using it. You had to do a KYC. You had to put your funds in. The other person had to put their cryptos in. The exchange would take place and you got value. So central exchanges allowed a trustless system to kick in, and then trading started to happen too. Because now there were these central platforms where you could go buy and sell without having to try and phone a friend. Off the back of the setting up of central exchanges, we also saw a change in the actual technology. Coins or blockchains were no longer just being driven by hardware in a proof of work model. We also saw the arrival of something called proof of stake, where you had to be a stakeholder in the success of that project in order to receive more coins and verify and secure that blockchain. We also saw this new language entering the market called smart contracts. Blockchain as a technology was evolving, was attracting smarter and smarter coders, and people started to imagine applications outside of just cryptocurrencies trading. With the arrival of smart contracts, we started seeing large trading platforms offering trading bots and assisted trading. The ability to not have to go and risk your capital with a trader and hope they don't run away with it. Who here has heard a story where somebody has said, man, I used to be on this amazing trading platform, but then the CEO disappeared? Like, that's happened a lot because people take their money and they give it to an expert trader or this magical trading platform. Well, assisted trading and bot trading and smart contracting means that that shouldn't have to happen. And you should be in a position where you keep your funds and copy trades. That's how it should be done. And so there's still a lot of red flags around there. And because of that, we've seen regulators and industry starting to engage to clean up that space. We also saw how coins were entering the market change. So instead of people having to just buy coins, they were getting coins for free. Those are called airdrops. Hey, if you go and talk about our coin on Twitter, if you go and tag us on social media, if you go and do a 5-minute video on YouTube, we're going to give you some of these free coins. And in the next year or 2 or 3, when those coins grow in value, that's our way of saying thank you. An airdrop is a marketing exercise, and we're still seeing airdropping happen today. We also saw the arrival of decentral exchanges. You see, smart contracts meant that blockchains and contracts could talk to each other. You didn't need people, you didn't need compliance, audit teams, attorneys, legal teams, accounting teams, making sure that value moved from point A to point B. The contract of blockchain would do it for you. And because of the arrival of decentral exchanges, central exchanges were suddenly having to compete against technology. And so they started offering loans like Nexo is doing. They started offering interest-bearing accounts. They started trying to make sure that they could hold the liquidity and hold their client base. Because of decentral exchanges, we also had the arrival of a new term or language called decentralized finance, or DeFi. That means when we engage with a decentral exchange and we put our liquidity there, we get a portion of that liquidity trade fee given back to us. In other words, we were playing a part in that financial mechanism without a centralized system. And so DeFi came about. And we're going to talk a little bit on that in a moment. Smart contracts have also opened the frontier for NFT market launches. Now, whether you understand NFTs or not, doesn't change the fact that it's here to stay. I want you to think about the art industry. Art has been around for thousands of years. People look at a picture, they think it's beautiful. They look at a sculpture, they think it's beautiful, and they give it value. And the moment something has value, it can be traded. NFTs are a digital marketplace for digital art, music, movies, photography, paintings, JPEGs. And whilst we're seeing some of it is craze driven, there's a whole lot of amazing application coming out of it as well. We're going to cover that in session 3. NFTs also opened up the space for gaming markets, and we saw something called GameFi. That is gaming financial instruments through blockchain starting to enter the gaming space. Again, we're going to touch on that in session 3 as well. Now, the gaming environments through blockchain can now talk to each other. That's where we're moving towards. I want you to pretend for a moment that your child who maybe plays Fortnite can talk to the child who's playing Fast and the Furious. Or the person who's excited about Pac-Man can go talk to the person who's excited about Bomberman. And maybe the value that they're getting on those games can be exchanged across different platforms. That's multi-relational or multi-functional platforms. And the catchword for that is metaverse. This idea that we can create different platforms in different industries and exchange value. We're going to talk a little bit on that in session 3 as well. So the technology has radically changed over the last 13 years. And the movement of money, flow, wealth, capital is moving with those changes too. So whilst our focus in session 1 was on principal accounts and the 4 big coins, our next 2 sessions on how to go and move with the markets in order to fetch the best value. So here in session 2, we're going to spend time talking about a performance account. If our principal account is our safe place, in inverted commas, where we are slowly building up on the 4 big coins, a performance account needs to be a place where we can start earning rewards. This is session 2. In session 3, we're going to talk about a potential account. The potential account is where we can go to markets that have the most potential for growth, the most potential for profits, and the most potential for rewards. Session 3 is probably my best, and I'm most excited about that session. But let's have a look at performance accounts. So just to recap, principal account, you choose your central exchange. I like Nexo, but maybe you're an altcoin trader person or a Luno or a Binance or a Cash App person. You choose the exchange that makes sense for you. That exchange needs to be your bridge or your conduit to move from dollars, pounds, euros into cryptocurrencies. That's its main function. Everything else is a nice to have. So here's the strategy. You can take a screenshot of this. We want to be able to take a small amount of our principal account. If you're on Nexo, you can borrow against that principal account, and that's even better. You want to take a small amount, move it into your performance account, and we're going to be spending time in something called a decentral exchange to do that. And then over a month, 2, 3, over 6, 12, 24 months, you want to take whatever growth you're seeing in your performance accounts, your profits, and go and bulk up your principal account. So it's not just about cost average purchasing every month with your salary or capital that you're getting from your business, but now it's also about profits that you're getting from your performance account. So let's have a look at how we're going to do this. We're going to use 2 different platforms. We're going to use a central exchange, and we're going to use a decentral exchange. And the coin we're going to focus on is something called the Binance coin. Now, the Binance coin is a really interesting coin because when you move it along its blockchain, it has really low fees. Bitcoin has higher fees. Ethereum has even higher fees. And so it's a good idea to understand the fee structures and fee costs when accessing different blockchains. So this is the movement we're going to focus on in session 2. And yes, it is going to be a bit technical. I want to just maybe help you understand a little bit of the history of the Binance coin. When Binance was first launched, it was launched on something called a main net or a native chain. And it was fairly one-dimensional. I want you to imagine that the blockchain was a dirt road. Okay, you could only go a certain speed safely. It was basic, it was rudimentary, and it allowed people to exchange value from central exchanges to other central exchanges. That was Binance coin in its early days. But over time, because of the arrival of smart contracts, there was a second chain or a second road that was created, which was a smart chain. It was like a very well put together tarmac road, smoothly done, well painted. You could take the corners sharply on it. There was a lot more that you could do on this particular road. And so most coins or Binance coins that we find in central exchanges tend to be the coin that is designed to move on an old blockchain. And we're going to need to change its tires so that it can actually move on the smart chain. Yeah, just a little simple analogy. We're staying with the road analogy here, but this is the movement that we're needing to do in order to take value from a central exchange, which is low interest or low reward bearing, and take it to a decentral exchange where we can go and get 20, 30, 40, 50, 60% interest or reward because of the liquidity that we can provide there. But it's a bit more technical. And we're going to have to, in inverted commas, change some tires. And so these are the 4 different mechanisms we're going to use. So let's have a look at how we do this. Tech steps. I'm going to take us into some pages and websites that you can screenshot. And again, we're recording this, and you can have a look as to how we can move it from a central exchange, low bearing, and how we can head it across to a decentral exchange, high bearing. So let's go do that together. I'm going to share my screen with you, and I'm going to take us into, right. So we are working with a coin called Binance coin, and we're working with a chain called the Binance chain. And so the very first thing we're going to need that'll help us move from Nexo all the way around to a decentral exchange called PancakeSwap is something called the Binance Wallet extension. And it is as simple as just typing in your search bar Binance Wallet extension, and then make sure that you go and find the extension in your Chrome web store. That's the extension that you want to use. It's the correct one. So you just click on it. It opens up an extension, and you can simply click on Add to Chrome. This is like our tire shop. It's where we change the tires. We take it from a dirt road to a tarmac road. We take it from a old blockchain to a new smart chain. And there it is. I've just had it added. There it is in my extension section. Little icon sitting up there. If you're not sure where your extensions are, they always sit next to this little puzzle piece over here. And so sometimes it might be in the puzzle piece and you might need to click on it to find it. But I've just added the tire shop into my structure. The next little bit of structure that I need is something called a MetaMask wallet. So I've just typed in MetaMask wallet extension, and I'll find it in the Chrome web store as well. So I'm going to click on that. Very same process again. I'm going to add it to Chrome. So I'm going to add extension. And here it is. It's popping up next to the little puzzle piece. There it is. There's my MetaMask wallet extension. So I've got the 2 wallet extensions that I need to move my Binance coin from Nexo, low interest bearing, change the chains, and then move it down into PancakeSwap. So these are very unique types of wallets. When we created an account with Nexo, we just used a simple email password combination. With these are called decentral wallets or seed phrase wallets. They don't sit with an auditing team. They don't sit with a compliance team. That means that they are run on high security protocols and smart contracts. So I'm going to need to generate a seed phrase when setting these up. I'm going to choose a password. So for this, I'm just going to choose test@1234. And I'm going to do the same over here, test@1234. Okay, so each of these has 8 characters or more, 1 uppercase, at least 1 number or digit, at least 1 symbol. And I'm going to agree to the terms. And I'm going to select continue. So I'm setting up a very specific type of wallet. I'm setting up the tire shop, and it does a very specific job. I need to then write down each of these 12 words. Remember I said to you, take notes. Do not take a screenshot of your seed phrase. In fact, I'm going to turn my camera off for a moment here because this is really important. Please do not take a photo of your 12 words. Please do not write your 12 words on a Word document or on any of your devices. Please only write them in a book that you can keep safe with you or inside a safe. Anytime you keep secure information on a device that can be accessed by the internet, there's a good chance that that device is going to be accessed by the internet. So don't do that. Okay, best practice first. Can you all type BP for best practice? When you do this exercise, do not save it on your devices. Someone smarter than you is going to, at some stage, hack your device and access that information. So I write it down. And in this particular example, I would simply be writing down, the words that the seed phrase gave me. I'd write down those 12 words, and then I would verify those words. I'd end up typing in 3, and it would now give me this wallet, this extension, what we call the tire shop. I can send Binance coins in here on its old slow chain all the way from Nexo. I can change the Binance coins that arrive in here onto a smart chain, and I can use this smart chain to go and talk to decentral exchanges. The exact same process is necessary for MetaMask. So if you're going to have a MetaMask wallet, you would click on Get Started. You would create a wallet. And again, you'd go through a very similar process. You would enter your password, so test@1234. And again, you would confirm the password that you want, test@1234. You've read the terms and conditions. You would create, and then it would do a very similar thing. It's going to give you some seed phrases. So what I like about this, it's got a 1.5-minute video that walks you through the steps. So you don't have to panic. But here they are. Here's 12 words that are specific to this wallet and specific to me. I would need to write these down. And when I get onto the next stage, I would need to enter them in the right order in order for this wallet to be live. Those are 2 very technical but simple steps to take. I want you to imagine for a moment that you've gone into the bank, you're wanting to open an account, and the teller calls the manager across, and the manager looks at your details, then they look at a little device on their phone, and that device generates a random code, and they type it in, and then they walk off. And that code is now changed. That's a form of encryption or security. These wallets over here are a form of encryption or security on blockchain. And we use them to move from Nexo all the way through that encryption into PancakeSwap. Nexo is a central exchange, so it generally uses old mainnets because all it wanted to do was exchange coins. And then the decentral exchange like PancakeSwap wants to interact with coins, interact with contracts. So we need to be able to change that coin onto a smart contract. And we need that mechanism to do it. We need that infrastructure to do it. So let's have a look at how we can set that up. Hold on a moment. I want to go back into screen share mode. And I want to go back to where we are here. So the tabs that I would be using in order to set up an account with PancakeSwap would be my Nexo tab, because that's where my Binance coin would be starting from. It would be PancakeSwap, because this is where my Binance is going to land. And I would need the Tire Shop, what we call the Binance wallet extension. And I would need the MetaMask wallet extension as well. That's the infrastructure I need for this particular movement. So I'm going to do the movement with you. I'm going to stop sharing my screen because I've just got to type in my real passwords, because we're going to use my real accounts now, not those test accounts. So give me a second here while I log in, and then we'll be able to quickly do the movements together. So let me get my passwords in. Again, for anyone who's on this call, we're wanting to give you a broad bandwidth approach to cryptocurrencies. So you'll notice that we're not bedded down in one particular project or one particular platform. We're wanting to give you the bandwidth so that then you can approach any platform or project with an understanding of how cryptocurrencies work. And if you understand them, you can actually then take the best advantage of those platforms and projects as well. Right, I think we're just about ready to go here. I'm almost set up. And let's do my last little bit of tech. You're all being very patient. Thank you so much. Hold on. Okay, we are all set to go. Now, very interesting fact is that Binance, because it needs the Binance wallet and the MetaMask wallet, it needs to run on the correct chains. Now, the MetaMask wallet is a really interesting wallet because it doesn't just support Binance blockchain. It also supports the Ethereum blockchain, something called Avalanche, something called Polygon. It supports a whole lot of different blockchains. And the mistake some people make is they try to move Binance on the Ethereum blockchain, or they try to move Bitcoin on the Binance blockchain. And so it's really important to make sure that when you look at your wallets, all the chains are lined up. You've got the right blockchains that are all talking to each other. Now, one of the things that you may need to do when you set up your MetaMask wallets, and I'm going to share my screen with you to show you this, is you may need to make sure that there is a Binance chain in your MetaMask wallet. And again, I know these terms sound a little bit confusing, or maybe they're a bit intimidating, but when you've plugged into a community, when you've got some mentors around you, when you've got other people on the same journey around you, you can always ask questions. And that's one of the things I really want to encourage. If you're on this call, it's because you're now part of a community who's going on this journey together. So I'm going to share my screen with you, and I'm going to take us into the page that we're working on. Share my screen. We're going to take funds from the Nexo account. We're going to get it all the way across to the Pancake account, and we're going to use MetaMask wallet and the Binance wallet and the MetaMask wallet to do that. When you're looking at your MetaMask wallet very quickly, there's a good chance it's going to be preset to Ethereum. And you might need to go and do something called add network, where you will need to enter the details of the Binance Smart Chain, and you'll need to enter its code. So again, I said the technical skill needed here is a little bit high, and it is easy to find the Binance Smart Chain RPC or code. Just by doing a simple Google, you'll be able to go down. You'll be able to go down, find that code, and you'll be able to copy it and paste it in to your address. There are some amazing videos on YouTube that help you do that, so I'm not going to go through that right now. Instead, what I'm going to do is show you the movement of money and show you how you can get a performance account working for you. So let's do that together. I'm going to stop that one. Right, so How do we send money from Nexo across into our tire shop? Well, we need an address to send it to. This is a lot like sending an email. You can't just send an email to no one. You need to have the address of the person you're sending it through. So in this example, I need to send Nexo on the old road. See, it doesn't say smart, it just says chain. I need to send Binance from Nexo on this old chain, and I need an address. Here's the address sitting over here, which is easy to copy and therefore easy to paste. So I come down to Nexo, I choose Binance coin, you can see it down here, and I simply click on withdraw, and it gives me a whole lot of options on how much I can withdraw. I would enter the address that I want to send it to. In this particular example, I'm sending it to the tire shop, and I would type how much I wanted to send. And I would simply click on withdraw. It would then ask me to verify the withdrawal on my email, and I'll go and click on verify withdrawal. It would now move from my Nexo account from here, where it's sitting in the wallet, and it would appear over here inside my Binance wallet. So 1 Bitcoin, and it arrived as a slightly smaller amount. It arrived as 0.92 because of fees. I now need to change the tires. Remember, this is a Binance coin that runs on the old dirt road, and I need to change it onto the nice, slick, new road. So I'm going to change the road that I want to send it to. Again, I might be going through this quickly, but that's why there's a recording. I'm going to change the road I want to send it to. I'm going to need the address again, like sending an email. So I'm going to copy the address. I'm going to come back to where I was, and I'm simply going to click on the send button. I enter the address like I'm sending an email, and I want to send the full amount. And I click send. Now, this is not people driven. I don't have to confirm an email. This is smart contract driven. And so I need to confirm it so that the contract, the blockchain contract, can go, oh, we're sending money from point A to point B. And that's exactly what's just happened over here. So I'm going to close it. There you go. It's gone to 0. So my 1 Binance coin has moved from Nexo into the tire shop. It arrived on a dirt chain, dirt road. I've now exchanged it onto a smart chain. And you're going to see it's going to pop up in a moment when it refreshes. And the moment it pops up, I'm then going to send it across into our next station, which is the MetaMask station. So whilst I'm waiting for it to pop up, I'm going to open MetaMask. I'm already on the Binance Smart Chain, so my roads match. That's a good thing. And I'm going to need that address. I'm going to copy it. Again, just like sending an email. You come back here. There you go. See, it's arrived. Just jumped up in value. So I'm going to click send. I'm going to paste the address. And again, I'm just going to send the amount that arrives, so 0.9. And I'm going to click send. No email verification needed, no compliance team, no lawyers, no auditors or accountants. This is moving directly through smart contract on blockchain. Hugely, hugely powerful technology. So again, there you go. It's gone down. I'm finished with that. So I'm finished with my Binance chain extension. This is my tire shop. I'm finished with it. I'm finished with Nexo, and I'm now going to come across into MetaMask. And there you go. It just jumped up to 0.9. An extra 0.9 has jumped up in here. I can now use this. I'm not going to leave it in this wallet to do nothing. I'm going to set it to work for me. So I'm going to close Nexo, and I want to send it to work for me inside the second largest decentral exchange. And yes, it has a ridiculous name, PancakeSwap. Just type the word cake if you think that is a ridiculous name. I do, but here's the reason. When the financial institutions started looking at what cryptocurrencies were doing, they got very protective. They got protective on their terminology, they got protective on their concepts, they got protective on just about everything. And so the cryptocurrency and blockchain community pulled a bit of a middle finger at them by saying, well, we're not going to take ourselves too seriously, but we are going to take the technology seriously. And so just about every platform you see has a not too serious name. And here's an example. PancakeSwap is not a very serious name, but it does some very serious volumes. It does just over 720 million US dollars of trade every 24 hours. It's just under $1 billion every 24 hours. Very interesting, this little thing called PancakeSwap. PancakeSwap has its own native cryptocurrency called Cake. And that cryptocurrency has a value of $7.823. So if you want to get the best out of the PancakeSwap decentral exchange, then they're going to ask you to exchange into Cake. So let's have a look at that together. I'm going to go to my MetaMask wallet, and I am going to do something called a swap or an exchange. And I'm going to change the 0.9 Binance coin that arrived in here, and I'm going to change it to the PancakeSwap token. So this is how I'm going to get it to go and get value for me. So I'm going to end up with 46 Cake at a value of about $386. I'm going to go get my $386 to go and work for me. So let's have a look at this. It's busy processing the contract. Okay, look at this. Look at this curious fox. This processing is not happening with the legal team and auditing team. This is all happening through smart contracts. So if I go look at my wallet now, I now have a Cake balance in here as well. Let's go look together. Here is some Cake. I've got 46 Cake. That is the native token for PancakeSwap. I'm going to connect my wallet to PancakeSwap. I'm not putting my funds, I'm not moving my funds out of my wallet into PancakeSwap. A contract is going to come into existence that allows me to lend liquidity into the exchange. Remember, it's doing $750 million worth of liquidity a day. I'm going to lend liquidity in there, and it's going to reward me for lending that liquidity. So I've just connected it. You can see there's my wallet address. There are a couple of tabs up here. I'm not trading. I'm not trying to win on a lottery. I'm not purchasing NFTs. I'm going to add my liquidity to a liquidity pool. And that helps the exchange stay healthy, and it helps exchanges take place. I'm facilitating the liquidity on this pool. I'm playing a role within this environment. I like to use something called AutoCake. So normally when you land on this page, there's lots of different pools here, but I want to use AutoCake because I want my cake to earn rewards. I can then swap it back into Binance Coin, send it all the way back into Nexo, and I can increase my principal. So I go to AutoCake, and there would be a button over here that you would press to enable your contract. So my contract is already enabled, but you would click on enable, and it would ask you to confirm it in your MetaMask. I'm going to add those coins that I bought, Cake. I'm going to add another 46 Cake in here. Each Cake is just under $8 worth of value. It's going to earn me back $226 of value on top of the $358 that I put in here. But that's only if the price of Cake stays the same. If the price of Cake halves, then obviously I'll only earn half of that, and my capital price will drop as well. If the Cake token doubles in value, then my capital will double in value and the earnings will double in value. So again, volatility, young markets, but I'm going to put it to work for me, and I'm going to click on confirm. I now have, just to go over what we've done here, I've now taken cryptocurrency that was sitting in my Nexo account that was earning at about 6% interest per annum. I've moved it from a central exchange where I'm getting low interest and reward, because obviously I'm paying a lot of salaries there. I'm paying accounting teams, legal teams, compliance teams. And I've taken a small portion across here to a decentral exchange where I'm not paying salaries and I'm being rewarded 62% APY on the number of coins. So the coin value can go up, it can come down. The number of coins I own will increase by 62%. So that is what I'm currently doing on my performance account. So let's have a look at those steps again together so that we're very clear on the tech steps that we've just taken. Let's go backwards one slide. We took Binance coin that was on Nexo, running on an old dirt road called the mainnet. We put it into our Binance wallet, and we changed it from main chain to smart chain. We sent it from smart chain into MetaMask. Inside MetaMask, we swapped it into Pancake's own token called Cake, and we put it to work for us inside the Pancake swap. Those are the steps that we've just taken. So not only do we have a principal account sitting with Nexo, we've now got a performance account sitting in PancakeSwap, which are compounding rewards for us. Did we go and risk a lot of money in this performance account? No. We took 10% of our capital, or if you're with Nexo, we took 10% of a loan and we went and moved it across into our Nexo wallet. So let's just do a quick recap of what we've covered in session 1 and session 2. In session one, I showed you how you can register an account with a central exchange so you can move from your local bank and local currency into cryptocurrencies. That was session 1. And we used the language principal account. In session 2, we took money that was now sitting in the central exchange. We took Binance Coin specifically. We changed its tires inside a Binance wallet extension, moved it along a smart chain into MetaMask, where we still hold the coins, and we connected that MetaMask to PancakeSwap, adding liquidity inside a decentral exchange and getting rewards for providing that liquidity. That's what we've done on session 2. Now, the very next session is probably going to be the session I'm most excited about. And so instead of a 10-minute coffee break, we're going to have a 5-minute coffee break before going into session 3, where we take this idea of a principal account, we take the idea of a performance account, and we start looking into the markets that have the highest potential for profits and rewards, and that's called a potential account. And I'm going to be giving you a very specific strategy and a specific platform where you can get 2, 3, 4, 5x growth inside one particular platform because of the potential and the markets that it breaks into. So go and stretch your legs, go and grab a cup of coffee. This is a 5-minute coffee break, not a 10-minute coffee break. I'll see you in 5 minutes time. Eugene, pump the tunes. We got a quick 5-minute coffee and toilet break. See you all soon. I don't know what the plan was with Eugene there, but that has to be the most chill music I've ever heard. That was awesome. And the mistake I'm making at the moment is I'm drinking zero Coke. So it's not even like I'm getting a sugar kick. So Eugene, thank you. You're an absolute legend, mate. So this is probably the session I'm most excited about. And here's why. Up until now, we've spoken about a principal account giving you safety and being the focus that you grow steadily through cost average purchasing. We've then spoken about a performance account and how to leverage the decentralized smart contracting capability of blockchain to start earning you some daily rewards, which is what Cake does. It rewards you for adding liquidity. In this next session, we're going to be looking at some evergreen markets, gaming. We're going to be looking at an exploding market, NFTs, and we're going to be looking at introducing partner programs that allow you to supercharge your crypto portfolio. These are the markets with the most potential. So where our principal accounts is about safety and risk mitigation. And our performance account is about daily compounding. Our potential account is where we see the most growth potential. And this is the part that I get most excited about. And what's really good is that if you've got a Nexo account, you can go and borrow 10% and put it into this space and see fairly aggressive growth. So I'm going to show you how to do that. So if you're ready, just type yes or go. I want the energy to pick up because we need some strong energy. We've all been on this call for 2 hours now. You've done so well at staying plugged in. This is the part where the rubber really hits the road. And also at the end of the session, I'm going to be giving $500 worth of crypto away to someone on this call. So I'm really excited about that as well. How can I give $500 away? Well, because of these very principles I've been teaching today. That's how. So it's not coming out of my pocket, and that's an exciting thing. So let's go and take a look at it together. I'm going to share my screen with you, and we're going to go back into our PowerPoint. Loving the energy coming through the chat function right now. Awesome, awesome to see. So let's power on. Let's have a quick recap. Session 3. Technical difficulty sits at about a 6. I want you to quickly rate yourself. On session 2, out of 8, where was your technical understanding? 8 out of 8, I was tracking with it. 4 out of 8, I'm probably going to have to watch that again. 1 out of 8, I'm just happy with a Nexo account. Thank you very much. There's no wrong answer. It's just worth knowing where you're at. This next session is not as technical, which is great. And it's slightly more technical than Nexo because we're going to leverage some of the understanding we have now and really get it to work for us. Awesome. I'm seeing lots of different numbers coming through there. Thank you for your honesty. That's always important in a community. So let's power on. Remember the slide. Remember the slide where I said blockchain as Web 3.0. This is the not security, not transparency, but rather the adaptability of blockchain as a technology. And up until now, you'll notice that we've actually covered exchanges, whether it's Nexo, Binance, or Altcoin Trader, whichever one you're comfortable with. We've covered decentral exchanges with PancakeSwap. And inside PancakeSwap, we're getting rewards for our liquidity. And inside Nexo, we're getting rewards for our capital. So that's what we've covered so far. In this next section, we're going to go into all the exciting red stuff. Trading, gaming, NFT, communication space. We're going to go and look at mining, liquidity, and capital rewards as well. So we're moving with the technology. Let's have a look at this together. So why do we want to pay attention to gaming? Well, just in the States alone, the gaming industry did $65 billion in 2021. What does that tell you? It tells you that people don't really care about vaccination protocols. They don't care about politicians. They don't really care about the markets when it comes to gaming. They'll just continue to spend time here. And so if we could somehow leverage all that time and leverage all that wealth going into the gaming industry, it would really benefit us. Now, I'm not saying you have to go and be a gamer. If you are a gamer type gamer, if you're not, say no. I want you to hear me very loudly. We don't have to become gamers in order to take advantage of the gaming industry. Blockchain is doing that for us. And so if we leverage the right platforms that are actually adding value and receiving value from gaming, then we can get value too. And that should really excite you. So that's the first thing. Gaming, just to give you an idea, is also setting the stage for metaverse. Now, again, whether we understand the metaverse or not is not important in our strategy. I don't need to understand how a car works in order to drive it, but I need to have a strategy on why I would want to drive it. And normally it's to get from point A to point B. The same is true here. We want to have a strategy that takes advantage of this move into gaming and the metaverse. The second market that we want to make sure we're taking advantage of is the NFTs, art, and collectibles market. Now, if you're very unsure as to why we're seeing a boom here, I want to give you 3 reasons. The first reason is that art and collectibles have always held value for humankind. We attribute value to paintings of women who don't smile. We attribute value to naked sculptures. We attribute value to paintings that look like somebody vomited a paint tin onto them. Humankind gives value to things. And they're now doing the same thing online art. The second reason why we want to pay attention to this is that wealth is transferred into art for tax reasons. Now, I'm not giving you advice on this, but I'm telling you that most art that we see on walls is not the art that wealth is placed in. That art's actually sitting in a warehouse somewhere. And with NFTs, that same function within the tax space is now possible, where you can plant wealth into NFTs and store it offline in wallets. And the third and most exciting reason why we should be paying attention to NFTs is NFTs can behave like a loyalty program. What does that mean? Well, imagine distributing just 10 NFT tickets. And those NFTs allowed you to go to a concert every time there was a concert in your city. Or maybe it allowed you to go to a specific shop and buy certain clothing lines at a cheaper rate. Maybe it allows you courtside tickets at a basketball game or VIP tickets at a rugby game. See, NFTs are the digital key to more value or loyalty value or exclusive value. Now, we don't have to go and create NFTs to take advantage of this, but we can partner with platforms that are taking advantage. And so I want to share with you how we can start moving with this market as well. So type in game, type in NFT if you're excited about leveraging the wealth transfer that blockchain has brought into that space without having the pressure of suddenly becoming an artist or an NFT creator or a gamer. Because I'm excited about that. I'm excited about leveraging this wealth transfer. So quick recap, where does this fall? We've covered principal accounts. We've covered performance accounts. We're now looking at potential accounts. This third session is all about potential. 2x potential, 3x potential, 5x potential. We want to move with potential. So welcome to our third session on potential accounts. Session 1, we know, local bank into Nexo or Binance or whatever, and then into cryptos. Session 2 was into decentral exchanges. Session 3, I'm going to show you how you can take value from a central exchange, move it into a virtual world platform called Lydian World. How you can then go and fetch value on another central exchange and leverage what we call an arbitrage opportunity. So I did warn you, technical level 6, okay, not an 8, a 6, but we're going to be dealing with a couple of platforms over here. So let's go have a look at those platforms together. The last part of the session is I'm going to show you how you can use virtual world, Lydian World, and you can become an introducing partner for Lydian World, and you can also earn commissions. So there's quite a bit to work through here. Here's the business plan. Let me pitch you on Lydian World within the NFT gaming space. Picture digital real estate with real world value. We're seeing it in Sandbox. We're seeing it in, we saw it in Wonderland. We're seeing more and more expression online where people are grabbing hold of digital real estate. Now, in order to take advantage of that digital real estate, you need to become a digital citizen of a particular country. Lydian World is split up into countries and territories. So you could become a citizen of Argentina or Brazil or anywhere else. In fact, you can have multiple citizenships within this program. Very similar to how if you were a citizen of South Africa, you had certain rights and certain access to income streams, same as if you were in the UK or in Belgium or across in the States. Well, here within this digital world, we have the same things too. But what gets really exciting is what is happening underneath this digital world. See, as a citizen, you can purchase the rights, mining rights, to mine digital resources. What sort of digital resources? Well, there's a resource in Lydian World called Lydian Stater, and it is very scarce. There's only 888 million units of it. Now you might be going, 888 million units sounds like a lot, but go and measure how many tons of gold are on this planet. Go and measure how many liters of oil are in the ground. The value of Lydian Stater today is sitting at $1,800 because of that scarcity. But what excites me about Lydian Stater is because it's the natural resource for Lydian World, it will be used to have more and more value in building out the infrastructure of Lydian World at a later stage. Well, where have we seen that concept before? Well, I believe here, planet Earth. I believe every time someone arrives in a country, the natural resources set the framework for communities and economies to thrive. I was brought up in South Africa. South Africa had a massive gold rush in the late 1800s around a small little place in the ground called Johannesburg. Johannesburg today is the largest city in South Africa because of a little resource called gold. So the same values, the same proven market strategies that happen in the real world are now being applied in the digital world thanks to blockchain. And as a citizen of a country, I can purchase mining rights to access this resource. I can then load capital into accessing that resource, a bit like buying mining equipment. The deeper I go, the more equipment I have, the more of that resource that I can mine out the ground. And similar to how Cake on PancakeSwap has a liquidity reward per annum, here in Lydian World, through Lydian World Digital Mining, you also have a reward, starting as low as 4%, going all the way up to 88%. Now, I'm going to show you a strategy in a moment where you can load at about 20% of the value. In other words, you can get 5 times the value by understanding what is called an arbitrage. And I'm going to show you that in a moment. Now, the exciting thing is if you've got multiple citizenships and multiple territories, then you can access those countries' resources as well as a miner. Now, understand that this is scarce. Brazil might have more Lydian data than South Africa. The UK might have more Lydian data than Vanuatu in the middle of the Pacific Ocean. China might have more Lydian data than Australia. It is scarce as a resource. And so it's important to understand that when you choose to become a citizen, you want to find countries that have good resources to access, just like here in the real world. Isn't it amazing how blockchain is taking best practice of the real world and applying it in an endless digital realm? That's what excites me. This is where the potential lies. And setting up a framework like this and building on top of it means we can take best world practice and apply it in a digital economy and digital space. But being a digital citizen also means accessing a digital economy, like I just said. And every one of these countries have economies or Commonwealth economies that are shared with the citizens. So what are we talking about here? Well, I've already unpacked that the gaming industry is booming. Blockchain is unlocking that community, unlocking that industry. And that unlocking is allowing value to flow into projects like this one. So without becoming a gamer, I can still take advantage of that trend. Through partnerships with assisted trading and trading houses, we can also have the trading of cryptocurrencies within Lydian World as another form of commerce. Education, academies, online universities can plug into this platform and provide for the citizens of countries. The creation, buying and selling of artwork can happen in this platform, geographically specific or globally as well because of how it is built. Card swipes, in other words, Lydian World is connected to a card provider who helps transition us from fiat into crypto and back into fiat again. I'm one of those card users. And a small portion of the card swipe fees and a small portion of the card service fees flow back into the economy of the country that I'm swiping in. Yield farming is available too, and more economic activities are being added to this digital world. All of these activities generate revenue. They come at a cost, just like here in the real world. And that revenue is shared back into the country and split amongst the citizens. So not only can you access the natural resources within Lydian World at 4 to 88%, but you can also profit from all the activity that is growing and being added to Lydian World over time. This becomes a one-stop shop. Today in session 1, I showed you a central exchange. In session 2, I showed you how many different steps you've got to go through to plug into a decentral exchange. But because of smart contracts and because of the new territory that blockchain is breaking, you can start consolidating all of those into one place. And that's what we're seeing in Lydian World. So how do we take advantage of the Lydian staking or Lydian data mining within Lydian World? And I want to talk about this because we have a very unique opportunity at the moment. And by understanding the markets, we can take advantage of that opportunity. So I'm going to show you how we can find value on the open market, bring it inside Lydian World, and realize it at a higher value. In case you're not sure what that's called an arbitrage. So I just want to go through that concept for a moment. If I were an apple seller, in other words, I sold apples, and I could fetch apples at $1 in the US, in America, and I could sell it at $2 in Europe, that would be a profitable exercise, right? I mean, that's doubling. Bought it at 1, sold it at 2, that's a neat profit. Now, the only way that that's possible is if the demand in Europe for apples was higher than the demand in the States. And we call that an arbitrage. It's the same product, no matter what side of the ocean you're on, but it has a different value in different markets. Apple, $1 value in the States, $2 value in Europe. That's an arbitrage opportunity. Please type the word arbitrage. No one's going to measure you on spelling if you get that concept. Same thing, different markets, therefore different value. We have an opportunity where there is a coin on the markets that is at one value, but when we move it into Lydian world, it's at almost 5 times higher the value. And we can put it to work in Lydian world as an asset through Lydian world Stata mining at a 5 times value. That's a bit like going with $100 to this market and turning it into an asset at $500 worth of value. And so I want to show you that. The second thing that I want you to understand is it's only possible to find these if you're plugged into platforms, you're plugged into communities, and you're aware of what's happening in the markets. So if anything that you get out of today's blockchain workshop, it's not just to have a principal account, it's not just to understand blockchain, but it's to find a community of like-minded people so that you can work hand in hand together. That's really the power of what blockchain is bringing to the market. We don't have to go to the bank and ask for advice. We don't have to go to the government and ask for advice. We actually get to work together on this stuff because the blockchain technology allows for it. Okay, so type the word community if that excites you. I see that as a big positive. Kind of tries to balance out some of that power shift that we've seen happening in the world. So let's go have a look at this together. We're going to need a couple of sites to do this. We're going to need a Lydian world site. We're going to need a Nexo site. And then there's a specific exchange that we're going to go to where there is a surplus of this particular coin. So the volumes are there, which means its price is low. And we're going to pull it off there and bring it across into Lydian world. So let's have a look and do that together. I'm going to share my screen with you. And we're going to go into Chrome. And you'll see that there's a couple of tabs up at the top of the screen here. There's a Lydian world tab. There's a GS trade tab. And again, we can open up a Nexo tab. Now, why do I always use Nexo? Again, for me, this is where my funds start. It might be different for you. Maybe your fund starts in Luno, maybe they start in Binance, maybe they start in Altcoin Trader. It's different. It's different for everyone. But my funds will start in Nexo. And what I will do is I will go and make sure that I've got a Lydian World platform account set up. Why do I want to be in Lydian World? Because I want to get access to this Lydian Stata resource. There's only 888 million of them, and I can only access it if I'm mining inside Lydian World. So I'm going to log into it in a moment. I've registered for this account through what's called an introducing partner program. So I'm going to show you how that works because there are commissions there. And I don't want you to miss out on that. If you're savvy with your finances, if you want to make sure you're getting the best value for money, then you probably want to come through the IP program. So I'm going to show you that in a moment. And then I'm also going to come across to GS Trade. And because it's a central exchange, I'm going to need to do a KYC on here. I've already done one, but it's the same process. When you register, it's going to ask for an email, password, etc. So to protect my privacy, I'm going to log in without you staring at the screen. And I'm going to ask that if you've got any questions specifically on arbitrage, maybe it's not a concept that has landed well with you, ask the question. Eugene's going to have a look through and he can answer them. But just give me 2 minutes while I log into the different accounts here. We'll just stare at the top of my head is the other thing you can do. This is when that relaxing musical music that Eugene was playing earlier would be making sense.
Okay, so let me just go through the questions here. So there is a question here in the comment section going, how do we choose a country for citizenship? Okay, so Louis, yeah, absolutely, very good question. So there are many strategies when it comes to playing in Lydian World. One thing you need to understand is number one, it's a cost to value option at the first glance. Okay, so it depends on how much leverage and how much money you've put into it so that you can actually go and acquire. So when you go through the system, you'll see that different countries cost different amounts of Lydian lions in order to actually acquire that citizenship. So that's the first strategy that I'll say you have to look at, is how much you have available to get into it. What we do have is on the Lydian World site, there's a really, really nice button where you can actually go and simulate on the quantum of value that you have in there to go and see in what countries you can actually get a citizenship. And then from there, you can actually go also into looking at how much resource is available within that country and how many citizens. So again, there's no right or wrong answer that I can give on that. It's all a personal strategy linked to value that you own there. I hope that's kind of helpful in the first step. And then also, you're going to have to go and play on the site to go and see, what can I do where and, for what. The second question, arbitrage is like equals leverage as well. Yeah, absolutely. Arbitrage is such a wonderful term when it comes to cryptocurrencies and when it comes to trading, okay, because we're always looking for the best value of acquiring an asset or a coin. Once you have that, it's all about where can you go and leverage it for more value. And this is what Bruce is going to go and explain to everyone, is that how to leverage that coin or that value that you've retrieved and go and place it in for more.
Absolutely, Eugene. Thanks so much for covering that. One of the other questions that came through, which was a really good question, is who decides the value of something? I mean, Craig was asking, who decides the market value? And in specific to Lydian Stater, the answer is the market. That's why the term is market value. Now, who decides that a Ferrari is worth more than a Toyota? Who decides that a Coca-Cola is cheaper than a beer? Part of it is cost to manufacture, but the other part is the market. If you go have a look at the cost to make a Porsche versus what a Porsche is selling for, the cost to make a Porsche sits at about 32%. And what it sells for is the profit margin, because the market has decided on that price. Now, scarcity and demand do play a role, but ultimately it's human nature. What made us decide that gold is more valuable than copper? What made us decide that gold is more valuable than silver? At some stage, we just made that decision, and we've continued to make that decision. What excites me about Lydian Stater is that it's not just its value that is being received at the market at the moment, but it's its value for use within Lydian World. So I want you to think about this for a moment. If you walk into a casino, your money actually has no value at the table. The token does. And so you've got to exchange your dollars or your rands or your pounds into a plastic token. And that token holds value at the table. And as long as you're at the table, you can get value, exchange value, play the game, be involved in that industry. But the moment that you want to go and cash it out, you've got to go and exchange its value. The casino has decided on a flat rate, so each coin has a dollar value and it climbs up. That's what the market has decided there. But outside of set values, it's you and I who decide on market value. Lydian World has value inside of it, and its economy will keep stimulating the value. Outside of Lydian World, the market will also decide on the value. And that we don't have a crystal ball for. That's why this is, and I'll put the disclaimer up front, this is a high-risk space because this technology is new, the concepts are new. And so we either going to move with them and grow with them, or we're going to stay away from them. And either is a decision. That really is. So I didn't want to get into the exact value, the tokenomics of it, but I wanted to give broad brushstrokes on ultimately the market decides on everything's value. So we've just got to see that Lydian Stater will hold its value or grow its value or possibly use value based on scarcity, demand, utility, and how the market receives it. So let's go have a look at this together. I want to take a look at the arbitrage with you. So I'm going to share my screen. And what I've done is I've opened up Lydian World. So here's my Lydian World dashboard, really easy to navigate. It's like one giant map, a little bit like playing, Risk in the old days or Monopoly, or, a game where it's an interactive board. Now, one of the things that is available in Lydian World is obviously mining, digital mining, where we can mine out that scarce resource called Lydian Stater. And one of the mines that I'm busy loading at the moment, so there's two parts to this. You buy the rights to mine, it's called a mining certificate, and then you load it with mining power. One of the mines that I'm loading is down here. Let me see if I can pull it up. Okay, so what I did here is I've bought what's called a tier 5 mine. So that's the maximum largest amount of mining certificate you can buy. It's a bit like buying a huge piece of land to mine on versus a small piece of land. And then I can mine deeper, I can mine more resources, and I get the most bang for my buck. In other words, I get 88% rewards per annum because of the amount of resource that I can mine. The part that I want to show you, I'm going to do some math with you in a moment, is that currently to load this up with capital, with resource, with the mining power and load, I can load it with something called Lydian Lions. That's like casino tokens that are valued at $1. I can load it up with a coin called XLT that is just launched on the market. And I can load it up with something called G999, which is now a year and 4 months old. This is the coin that I'm focused on, and let me show you why. This coin has a market value inside Lydian World of 2.5 cents. That's its market value inside Lydian World. When I go look on a platform, a trade platform, and again, you can go look at CoinSuper, South Exchange, HitBTC, there's a whole lot of different exchanges. But when I go look on this exchange over here, GS Trade, and I go into markets, I want to show you something. The G999 value inside here is 0.0039. I want you just to play with calculators because I'm not really a calculator person. But what is the difference? If this is 0.025 and I can fetch it on the market for 0.0039, what is the multiplier there? What is the arbitrage potential that I'm sitting on? Out in the market, it doesn't have massive value at the moment. Inside Lydian World, in order to grab hold of that scarce resource called Lydian Stater, it does have value. What is the difference? Okay, so a couple of fast fingers are typing in the chat function there. It's a 6x difference, a 6.4x difference, a 6.25x difference, a 5.5x difference. Yeah, there's definitely a price difference. So I can fetch it at one place. I can fetch it from the markets at a low price, and I can put it to work for me inside Lydian World at a higher value. The only potential problem I face is there a lot of G999 for me to fetch? So I've clicked on G999 USDT as a pair. And again, this is just a little bit of savvy, having spent some time in this space. I'm going to go down and look at what sort of volumes I can buy G999 for. How many G999 can I buy? I can buy 51,000 over here, 50,000, 32,000, 8,000, 24,000, 26,000, 15,000, 9,000, 5,000 coins. Remember, these coins all have a 0.00 now 0.004 value. So you see how the price is slowly increasing every time I go and look for more coins. Here's a nice batch, 209,000 coins, 104,000 coins. The price is just climbing incrementally. In fact, if this price got all the way to 0.005 in price, that would still give me a 5x multiplier. So I like using this exchange platform because there's a lot of coins on here that I can go and buy. The volumes on here are good. I don't want to go to an exchange where I can only buy 2 G999 at a time, or 10, or 120. I want to be able to buy up tens of thousands and hundreds of thousands of coins while the value is still lower than 0.05. Because at 0.05, that's a 5x multiplier. So I like all the volume that I'm seeing on here. And I can buy this using USD Tether. And what was one of the currencies that I've got on my Nexo account? In my principal account, what are one of the currencies? Tether is one of the currencies. I can send Tether into this exchange. Very, very simply, I can go to my Nexo and I can get the address over here for Tether. Here's Tether. I can click on deposit and it's going to give me an address. I take that address all the way across to Nexo and I go and send Nexo my address, and Nexo sends me the USD Tether. And I will end up with Tether sitting over here. In fact, I've got $102 of Tether over here. Why don't I go buy some coins? I'm going to go buy some G999 with $102. I've already got $163 worth over here, but let me go buy some coins. I want to show you a really interesting exercise very, very quickly. And the only reason why this is possible is because of this arbitrage. So let's go spend $100 quickly. G999, USDT, there it is over there. I'm going to click on it and I'm going to buy $100 worth. Right, so I'm going to use the last price that was advertised. So it goes and chooses this last price. In fact, I want to use this price. It's a better price for me because I can snap up the coins faster. I'm going to go maximum amount of coins. Okay, yeah, that's fine. I don't want the price to change. It might just change while I'm trying to do this order. Okay, I've placed the order and it's going to give me a whole lot of extra coins. And those coins are going to show up. They're going to show up inside my dashboard. Right, so I'm going to end up with, let's see, there you go. I've now got $265 worth of coin in here. $265. But on the current exchange rate, what will that value be if I take it to Lydian World? You can tell me what the value will be on the current exchange. I'm going to send it across there, by the way. I'm going to go do that now. So I'm going to find my deposit. I need an address, just like sending an email. So I'm going to come down to finances here. Financial. I'm going to deposit. There's deposit. I'm going to change it to G999. So I have my G999. And I'm going to copy this address. It's like sending an email. I'm going to send all those coins that were sitting on the GS trade. They're out on the open market. They've got a very low value out here. They're not doing anything for me. I'm going to send them across to Lydian World. I might actually have, that's the same address, I think. Right. And how many am I sending? I'm sending 65,000 coins across. Okay, there you go, 65,000 coins, submit. Enter my code, so give me a second here. I have an extra little layer of security. It's called a 2FA, which I've got to just pull up and enter. And this security code changes all the time. I've only got like 30 seconds to do this. Okay, and again, because it's a central exchange, what is it going to do? It's going to ask me to confirm on my emails. So I'm going to go and confirm on my emails. I'm doing this all on my phone, by the way. So if my camera disappeared, it's because I'm on my phone confirming emails. And approve. Okay, I've just approved that withdrawal. That means that those coins are now going to appear over here in Lydian World. And you see that the balance of G999 is currently 0. But no G999 in here, but I've just sent myself a couple of thousand G999. I've sent myself about $200 worth of G999. And what I'm going to do with that G999 is I am going to go and fill up my mining power. I want to show you what starts happening over here because I don't think people are understanding how powerful Lydian Stater mining is. Let's play with a bit of a calculator so you can see what I'm doing here. I currently have something called a tier 5 mine. Okay, that tier 5 mine cost me $12,000 to have the mining rights. Just like in the real world, you need mining rights to access resources. In Lydian world, you need mining rights. So I purchased the mining rights, cost me $12,000. That $12,000 value is immediately converted into Lydian Stata. So 7.2 Lydian Statas are set aside to be given back to me at the end of the mining period. When does the mining period end? It's a 3-year-long period. I'm buying the rights to mine this for 3 years, and 7.2 Lydian Statas are going to be set aside at whatever the market price is. So if the market price doubles in the next 3 years, then I end up with double the dollar value. If the market price triples in the next 3 years, then I end up with triple the market value. If the market price halves in the next 3 years, then I end up with half the dollar value. Now this mine I can fill up with G999. So if I want to fill it up with, what is that, $50,000 worth of G999, remember I'm getting the G999 at 5 times less. So technically it's only going to cost me $10,000 to fill it up. But it's going to lock up $50,000. Look here. My 12,000, my 11,990 plus 50,000. That's how many Lydian Statas get locked up for 3 years. 37 Lydian Statas at that value. And again, if the price increases by 3, or if it increases by 2, or it halves, the dollar value will increase by 3, increase by 2, or half. The other thing that happens is that because of this mining certificate that I've got, the mining rights that I have, I can mine another 79 Lydian Stata out of the ground. That's what this certificate enables me to do. And at today's price, that's $132,000 worth. If the value doubles, then that'll double. If it triples, then that will triple. If it halves, then that will halve. So I get this back after 3 years, and I get this paid to me every 15 days. So this amount divided by 3 years, divided by 12 months, and divided by 2 to give me every 15 days. That's what I get paid out. What did it cost me though? Because of the arbitrage, it cost me my mining certificate, which cost me $12,000. It's a flat rate. And because of the G999 arbitrage, it's probably only going to cost me $10,000. That's $22,000 for $180,000 worth of value. Why is that possible? 2 reasons. 1, there's an arbitrage. And 2, this is scarce. And Lydian world is new, which means that the resource is still available. It can still be accessed now. It's that first time that the people arrived in Joburg, and there wasn't even a hole in the ground yet. It's the arrival of all those families in the Klondike up in the Yukon area, Canada area, who arrived with picks and shovels and put pegs in the ground and string in the ground and started digging. Hadn't yet gone to market, hadn't realized huge value. This is what's possible because of that arbitrage. So to give you an idea, I've currently loaded this with $241,000 worth of value. I can max load it to $500,000 worth. What does it really cost me? Because of the arbitrage, what does this actually cost me? It's cost me about $50,000. So click on load G999. Still waiting for the balance to arrive. So let me go see if I can refresh and see if it pops in. I've got $200 worth of value arriving. I may as well go and put it into the mining certificate. Let me just update here and see if it's arrived in my dashboard yet. Let me see if I can load. Let's see if I got the extra amount. Okay, the G999 haven't arrived yet. But when it arrives, it'll be another $1,000. So I'll move this to $242,000. And it only cost me $200. That's the power of understanding an arbitrage. That's the power of mining a digital resource. It's not possible if you don't know what's happening in the markets, though. It's not possible if you're not tracking with what's happening in blockchain. And more so, it's not possible if you don't understand which market you want to position that wealth into. Why am I comfortable positioning into Lydian World, into digital mining, because the platform is designed to disrupt and enter into the NFT gaming and trading space. Those are the markets that the technology is moving towards. I want to move with those markets. So we're almost done. We've got half an hour left. I want to start wrapping up. That's one of the arbitrages that exist for you to take advantage of. And it is as simple as fetching it from one marketplace, like GSTrade, and bringing it into Lydian World. The second opportunity I want to talk about is what we call phase 2. This is an introducing partner program. So I came out of the Forex trading space, traded Forex for 7 years, and all the big financial houses had what was called trading desks. And in order for them to attract liquidity and users into their trading desks, they set up something called introduction broker programs, where you could be introduced into the trading desk. And those introducing brokers got a commission. Well, we've introduced the same here. We've got an introducing partner program. And you can earn cryptocurrencies based on all the sales that we see within the world. What do I mean by that? Well, by introducing more partners, more citizens, more users of Lydian World, you get access to the fees and the costs that are coming through all the purchases and all the sales of that community. So when people are gaming, when they're trading, when they're mining, a small portion is set aside as commissions and paid back to the introducing partner. It's hugely empowering. What sort of fees are we talking about? And what does it take to become an introducing partner? Well, you need to pay a $33 a month subscription to say, I am a partner, so that Lydian World can track that you are a partner. They will then also issue you with your own introducing partner link, so that if you have people registering, they can track what those people are buying. There are professional sales and marketing tools and funnels available. You do get 10% discount on your own personal product purchases. You get access to all product promotions or incentives or sales bonuses. And you get training on social media strategies. That's what you get for your $33. And you can choose not to pay it, and then you can't be an introducing partner for that month. So it's a robust, dynamic program where you can onboard and get off again if you don't want to. Very simply put, you as an introducing partner have the social media tools to share into your network. So those people who want to engage in cryptocurrencies, who want to engage in Lydian World, who want to engage in NFTs and gaming and Lydian staking, can get the right information in their hands to make their own decisions. And because they've onboarded through your IP, your introducing partner link, all the purchases they make thereof. So whether they're purchasing our crypto card, or they're purchasing Lydian miner certificates, or they're getting into gaming and trading, those purchases of products and services earn you a commission. And that's pretty cool. There's a mentorship program. So you are encouraged to help other introducing partners also go and market, and you can earn a small percentage of those sales as well. So we get asked often, is this a type of program that you can maybe build into a business, or is it just a nice side hustle to have? So we started doing some numbers on just the subscription, on just growing out more and more introducing partners. And the numbers get really interesting. If you're earning your 50% commission, plus you're earning a small commission on other sales within your community, then over time, if you grow a community, if you leverage social media and you have lots of products and services moving, then yes, it does become a substantial business model too. So that is something worth having a look at. As an introducing partner, you do get paid in cryptocurrencies in real time, and that could be for just sales commissions. But as I said, there's also bonuses, there's incentives, there's volume-based commissions in place as well. Lydian World has a lot of flex to it. There's a lot of ways people can enter the market. And so the commission structure needs to reflect that flex as well. So what do you do with that extra commission coming in? Well, very simply put, why not move it back into Nexo? have your principal account grow, and then take a portion of that and do the same thing again. Go and put some across into your performance accounts. Go and move some more into the potential accounts. All we do as a blockchain community is we look for fulcrum points. We look for areas where there is expansion, where there is growth, and then we leverage those points. And the same is true here. I want to have a little walkthrough of what happened just now when we started loading those certificates. So I am an introducing partner for Lydian World. I've paid $33 a month for that privilege. And I take it quite seriously, so I do use social media. But I want to show you what started happening when purchases of Lydian Stater mining certificates were being made, when people were purchasing goods in Lydian World. Have a look at the commission structure, because I think that's useful to see as well. And I want to show you what I've been doing with that commission structure. So let me get us into, here's my introducing partner dashboard. So it's separate. I can track all the movement happening in here. And I'm not going to share because I need to log in. Suddenly realized that I haven't logged into that. So give me a moment. And we're almost done, guys. Can you believe it? And we've come through 3 hours. We've gone through principal accounts. We've gone through performance accounts. We're now looking at an arbitrage potential account. And we're looking at a way for you to also be an introducing partner if you want to. That's hugely powerful. Almost done now. I realize that I can't talk and type at the same time. I'm really making mistakes. So give me a second, probably about 15 seconds away from finishing this. And I've got pretty rigid security protocols in place, like you should, if you are looking after your own cryptos. Let me just log in here. I'm going to wait for my code to change. The code updates every sort of 30 seconds. So give me a second here while I wait. And we're almost ready. And we are done. So I'm going to share my screen with you. Let's go back to screen share. And I think we're in the right place now. All right, so as an introducing partner, I can run my own business from my own back office. I can track commissions that are coming through from all purchases. And here's what's really powerful. Here you can see I've got $2,800 worth of Tether commissions. So what can I do with that Tether commissions? Well, guess what I'm going to do? I'm going to send it to Nexo, because I can borrow 10% against that if I want. And that's $280 that I can put to work for me, either on the arbitrage with G999 into Lydian Stater and keep filling that mining certificate, or I can go put it into PancakeSwap and earn rewards there. You can see I've got some Bitcoin commissions, some Ethereum commissions as well. I can track the purchases, and this is where it gets really exciting. I can track the purchases. So have a look here. 1 hour ago, I've been reminded, hey, Bruce, don't forget, it's time to renew your own introducing partner subscription. I'm going to use my commissions to pay for that, but let the business pay for the business. That's just good business practice. But I can also see that I've got commissions flowing in from sales that are being made either personally with what I'm doing or through some of the other introducing partners that I've teamed up with. There's an area down here where I can see exactly where the commission was generated. And because it's blockchain, remember what I said, blockchain is a powerful distributed ledger where no one can cook the books, no one can manipulate the numbers. I can see exactly what's happening over here. I can see people who are buying NFT market vouchers within Lydian World. And the little, look at this, $1, $2, $1, $1, $1. I can see here was a purchase. That is a mining certificate. This is a partner that I work closely with in Zimbabwe. She's busy loading up her mining certificate. But look, I got a commission from that. And I can go down and I can track all the different purchases that are happening through Lydian World that are commissionable, because I am an IP. I'm an international, I'm a introducing partner, and I'm leveraging the introducing partner program. And this isn't huge money, but every now and again something moves and it's good commissions based on it. And you can track those commissions flowing in. And that's super useful. That means that I've got a business vehicle that I can add back into my principal account, increase my principal account through cost average purchasing, take that principal account, leverage it back into arbitrages like this, and back into performance accounts like Cake. And by doing that, by having those 3 accounts running, performance, principal, and potential, I can start leveraging what I'm earning over here. Now, for those of you who came onto this call and you started at, I don't even have a principal account, I want you to go set that up off the back of this call. Before you look at Lydian World, before you look at NFTs, before you look at gaming, before you look at PancakeSwap, go be responsible and get your foundation in place. I leverage all of this to go back and add to my foundation. The bigger and stronger my foundation is, the easier it is for me to take value and move it back into income providers like the one that I've just shown you. Lydian World is now my passion and it's my business model. And Nexo is the principle that I really leverage and make it meaty for me. So try and figure out what you're trying to do. Try and figure out what your goal is. I'm sitting here in Dubai. Up till now, I haven't shown you actually where we are, but we're going to be wrapping up soon. I'm going to be giving away $500, so don't go anywhere. And you better have a wallet address set up on somewhere for me to send those dollars to. But we moved to Dubai, so to give you an idea, we moved to Dubai for 8 months of the year. That's the view. Pretty cool, hey? So for 8 months of the year, we're here in Dubai because cryptocurrencies are borderless. And the metaverse and gaming and trading, that all is without boundaries. What I've shown you today is the start of something. But your decision is to start that something. So as we start wrapping up, I want to just talk through some action steps, because I think that that's fair as we start wrapping up. So what's in it for you when it comes to Lydian World? Earn cryptos. You can go passive on the economy and the Lydian states. You can go active on the introducing partner program. You get turnkey tools and systems. It's your time, it's your business, so you decide what you want to do. It's easy to do. Register an account. Specific on Lydian World, you're going to need to register an account through an introducing partner. So if you're on this call and you popped on here because someone sent a link to you, someone sent this workshop link to you, get back to that person and say, hey, listen, I need help setting up my Nexo account. I need help setting up my Cake account. I need help setting up my Lydian World account. Sit with that introducing partner. If somebody shared this workshop with you, get back with them. They're part of our community. They've probably come through a course with me already. So they know what they're doing. So in conclusion, very simply put, go and build your accounts appropriately. Get your splits correct so that you mitigate risk. Borrow against your accounts responsibly. Nothing higher than 20%. Trust me on this. 10 to 20%. Take the profits and increase your principal accounts. Do the same on your potential. How exciting is it that you can borrow 20%, and because of the arbitrage, that 5x, 20% becomes 100%, so you're able to get that asset working for you? The support that we've got is simple. One-on-one, get back with whoever invited you onto this workshop. If it was me, hey, contact me. If it was somebody else, contact somebody else. We've got a wide community. Get some one-on-one support and mentorship. Ask if there's a Facebook group that you can plug into or a Telegram group that you can plug into where real-time information, whether it's market analysis or arbitrage opportunity or marketing strategies or advice on principal accounts, plug into communities on Facebook, Telegram that you trust that you can get that support from. If you want to know the timeline on further trainings, well, every month we're going to host this workshop. So the next training is 19th of March, 3-hour training. If you got value out of this, just type yes. If you type yes, invite somebody else to get value next time. 19th of March. We're going to go through the same information. We're going to update the stuff that is market relevant. But every person can come through a course like this. We've also got a monthly free course that we split over 3 days, 1 hour each day. It's this material, but it's just an hour each day. So if someone can't set aside 3 hours, they can plug into that. If you want training on Lydian World, which is the next frontier, we've got weekly training on a Wednesday and Saturday. And then daily, and you should have a mentor, you should find an introducing partner, you should find someone who's walking this journey ahead of you, because then you've got real support. And that's a good thing. You can start building a community around you. So I want to thank you for your time. It's hugely exciting to see over 150 people who came through this workshop today. And I just want to say thank you by giving somebody some cryptocurrencies. Now, this is a complete random giveaway. There is absolutely no system to what we're doing here. Here's how it works on my phone, just to give you an idea. I don't know if you can see my camera. Let me stop sharing. So I've now set my phone up that it's got what's called a scroller. So all that happens is I flick it. It scrolls through every person who's currently sitting on the call. And when I click the button, it's going to highlight a person's name. So whoever I'm about to promote to panelist, you've just won yourself $500. So let's see if this person sees that they get promoted to panelist. Right, if you've just been promoted to panelist, can you turn your camera on and your video on? Yeah. There's that one. Who's that? Nigel in the background?
It's Nigel, he just came home from hospital. Yay!
Oh, what a good gift. That's awesome.
Thank you.
That's so cool.
With you.
So Lou, here's what I'm going to ask you. So for those of you who don't know Lou, I know Lou and Nigel very well. And that doesn't mean that this was a setup at all. I promise you it was a scroll and a click. But Lou, I want to give you $500 worth of crypto right now live on this call. So everyone can see how simple it is to send crypto from one person to another. You know, in the training, we said it's like sending an email. So let's send an email. I'm going to send you a $500 email. Where do you want it to land? Do you want it to land in Lydian World? Do you want it in your Nexo account? What address do you want this landing in?
GS Partners, please.
Okay, cool. So introducing partners, you want it to land into that dashboard. Do me a favor, Lou, can you grab that address and copy paste it right now into the comment section?
Okay.
Again, I want people to see how simple it is. I'm going to share my screen and I'm going to go into my financial dashboard. So again, I'm going to use, very simply put here, I'm going to use the, am I sharing screen? Yes. I'm going to use my introducing partner program commissions. I'm going to use my business to give away $500 here.
I'm under pressure now.
No worries. And look here, here's the balance that I'm going to send it from. Okay, I've got $2,860 worth. I want to make sure that I send some value to Lou right now, as simply as sending an email.
I'm so lucky. We're so lucky.
Power of the mind.
It is. We were talking about winning something else.
Louisette says she always wins because she knows she deserves.
Look, I'm just glad that when you won and I asked you to turn the camera on, Nigel had just got home and you guys weren't celebrating too quickly. So that's always good.
I wish. No chance of that at the moment.
Just a little bit more healing to go. Okay, I'm just putting in my
awesome.
2FA.
I'm just going to close the door here. All I can hear are jet skis and sports cars. So give me a second.
That's such a tough life, Bruce.
Okay, and again, we want to do this on the call in front of people because what is blockchain? It's secure, it's transparent, and it's adaptable. We've just finished an entire training showing the adaptability, and now we're going to show transparency and security by me here in Dubai, sitting in my lounge, sending you all the way in South Africa $500, and it's going to be within 10 minutes. It's going to arrive. We haven't had to go through a bank. We haven't had to get permissions. and we've been in charge of the process.
So
So
Bruce,
Lou, have you put it into the
are we doing Ethereum or Bitcoin?
USDT, please? We're going to send USDT.
USDT. Okay. I'm going to generate a new address so it's nice and fast.
Awesome. And then just pop it into the chat function here so everybody else can see the address as well.
Yeah, if anybody else wants to donate, I'm very happy to receive. Okay. Where do I go now? Let me just see. I am on Zoom. No, I'm just checking. Is that your screen or my screen? Oh, okay. Hold on.
No, Lou, I'm not sure.
Okay, hold on. Now I'm sweating because this is so much pressure. Okay, I just need to find our chats. That's all I need to do. What am I doing?
Find the Zoom
Oh, there we go.
function.
I found you. I found
Okay.
you. I found you.
Okay. Into the chat function now.
Okay, so now I'm going to send it to panelists and attendees. So everybody can donate. I'll gladly accept.
Okay, so that's, thanks, Lou. So that's an address, a little bit like an email address, but this gets time-stamped into the blockchain. So no one can ever corrupt it. No one can ever, manipulate it. So we're going to go down to my financial tab and we're going to do a withdrawal.
How much USDT I've got? Don't even see.
We're going to do a withdrawal.
Do you want me to share screen afterwards, Bruce?
No, it's absolutely fine. Yeah, you can if you want. So we're going to withdraw Tether. Okay, Tether's a stable coin. It's pegged to the US dollar, so it's not going to change when it arrives on Lou's side. It's a new address. I've never sent Lou any cryptos before, so I'm going to paste it. And I'm going to say Lou and prize. Okay, Lou prize, add new address. Right, let's go send Lou $500 for making it through 3 hours of training and becoming a smarter person. How cool is this? You get paid to be smart. So let's go find Lou's address. There's quite a few addresses in here. There's Lou prize.
Type it in,
We're
yeah.
going to send her $500. I'm going to initiate. For security reasons, I'm going to just put in my two-factor authenticator. Oh, and it's no fee because I'm sending it to another partner. That's an added bonus.
Definitely.
And then it's asking me to confirm on my email. Again, another layer of security. Okay, guys, what do we know? If it confirms on an email, what kind of exchange are we dealing with? In the chat function, if it requires an email verification, what kind of exchange are we dealing with? CEX, I love what I'm seeing. Yes. Awesome. Whole lot of people typing central exchange, central exchange, central exchange. Absolutely. Right. So let's go have a look. Let's go have a look. Let's go look if I am $500 poorer and I am $500 richer in relationship. Who says you can't buy friends? I'm joking.
We'll see you in Dubai.
There you go. Look at that. $500 gone. I'm going to stop sharing. Lou, would you mind sharing your screen with us?
With pleasure. I just hope my screen is decent. Oh, it's asking me for security settings. And
security
password.
settings.
Yeah. Screen.
Okay. Let's go across into financial. And it's even going to log, it's going to log a little deposit for you to tell you.
Okay, so I've got 613 USDT. I don't know if that was before or after.
Go click on your bell notifications on the top right corner. There's a bell with notifications.
That's a very good idea.
Let's have a look here.
Bell. New deposit. Wow, that's quick.
Yay. Yay, Lou. It's a
Thank
pleasure.
you,
Well done for being on the course.
You're gonna go
Okay,
buy
so
mine. How about that?
as we start wrapping up, guys, we've done so well. We're 4 minutes away from 3 hours. You've all been fantastic. There are a couple of things that I just want to say. Lou, if you can just stop sharing, that'll be helpful as well. But there are a couple of things that I just want to say to every person on this call. So first is this: start somewhere. Start somewhere. The second, plug into a community. So if you're going to start with support. And then the third is this: keep coming back for more. In other words, if you're plugging into a community and you're starting the journey, then keep coming back to get more information on what's happening in the markets. This isn't a once-off. This is an opportunity to keep turning the pages of your book, keep opening new chapters in your life, and keep moving forward. That's what it's done for me over the last 6 years. We're a community who wants to share that with a whole lot more people. So I want to thank you for your time today. A big thank you to Eugene, Brendan, Harry, Michelle, the rest of the tech team that helped give support today. I'm looking forward to seeing you all on next month's training, on weekly trainings, and looking forward to seeing you plug into our community. Thank you so much. Have an awesome, awesome weekend. Have an awesome Saturday, and take care. Cheers, everyone.